Hello and welcome everybody to today's training session, How to Trade Silver, presented by myself, Phil Carr, at the Gold and Silver Club. During today's session, we are going to be going through the following. So we'll be covering live market analysis. We'll be providing you with a watch list of trade ideas. We'll go through analysis of where we expect gold and silver to be heading next. And of course, today's topic is going to be very focused on how to trade silver. So before we get into it, let me introduce you to the Gold and Silver Club. So the Gold and Silver Club is regarded as the go-to authority on commodities trading. As internationally respected experts, our analysis and our opinions on the metals, energy, agriculture, and the cryptocurrency markets, they are routinely sought by major financial television channels and publications, which include Bloomberg, Reuters, CNBC, the Financial Times, the Wall Street Journal. Our team of experts has trained and mentored thousands of traders from all over the world to invest in the financial markets with confidence using our exclusive strategies. So for further information on the Gold and Silver Club and our expertise, please do visit www.thegollandsilverclub.com. Also, if you would like to find out more information about the training programs that we provide at the Gold and Silver Club, the link to make an application to find out more is www.jointhegollandsilverclub.com. I'll come onto that in a little bit more detail later on in the session, but that is the link to make a direct application to find out more about the training programs, and more specifically, the live trading room program that we provide to our clients at the Gold and Silver Club. Okay, fantastic. So, right, before we get into it, I want to just have a quick rundown of where we are at right now in terms of the momentum of the markets. We've got the minutes of the FOMC statement, which are due to come up in just approximately 1 hour. And the minutes of the FOMC, they are released 3 weeks after the Federal Reserve statement, the FOMC statement. And it can cause quite a lot of volatility, especially so far in 2018. The minutes of the FOMC have been almost as high impact in terms of impact they have on the markets, the US dollar, on gold and silver, on the commodity currencies, as the actual FOMC statement itself. So that is coming out in approximately 1 hour. We'll have a look at some of the trade opportunities that are lining up ahead of that. We want to see how aggressive the Federal Reserve are going to be in relation to additional interest rate hikes this year, and any clues regarding an interest rate decision or interest rate hike as we get closer to the June 13th FOMC statement, where the Federal Reserve are anticipated to increase interest rates. And I'll talk you through that in more detail when we have a look at some of the fundamentals very shortly. As we get closer to that news item, we've definitely seen some volatility today on gold, on silver, on platinum. We saw quite large moves actually yesterday after the dollar sold off from 5-month highs. Gold broke out. Platinum broke out, was up about 1.5% on the day yesterday. Palladium broke out, and so did silver as well. However, everything is flatlining as we get a bit closer to this statement. One of the reasons for that is often traders are squaring up and taking profits prior to a major news item like that. And that's seems to have been the case as we get closer to the minutes today. We're seeing a bit of a pullback right now on the New Zealand dollar, on the Australian dollar, on the euro, on the pound. All of those are now moving into negative on the day. We can have a look at that, the commodity currencies, very shortly. Silver has turned a bit negative after quite a big up move over Monday and Tuesday. It's now down almost 1% on the day. Gold is still holding up. It's more or less around the opening price from earlier on today, so it's up ever so slightly, about 0.15% on the day. So we'll take a look at that very shortly on the charts. And in terms of fundamentals that you want to be aware of as well, of course, the major news item that everybody is focusing on now is the minutes of the Federal Reserve. And the dollar retreated yesterday after 6 days of straight gains, as we saw US Treasury yields dip and investors look for fresh incentives to buy the currency in the wake of nearly 7% rally since mid-February for the US dollar. So we saw it pull back yesterday, which gave a bit of support here, especially for gold. So gold steadied, and we saw gold get a bid yesterday after the US dollar index has sold off. So you've got to remember, most of the time we are trading gold directly versus the dollar, and if we get a strong dollar, it causes pressure on gold, and if the dollar sells off, that will likely provide support for gold as well. And that's really what we want to look at as we get into the minutes of the FOMC today. We've also started to see stock markets sell off. So if you trade the FTSE 100, the DAX, the Dow Jones, and NASDAQ, the S&P 500, we've seen Donald Trump fuel uncertainty again in the markets here. So US stocks fell today. We've seen the S&P 500 actually develop a sell signal after President Donald Trump injected a fresh dose of uncertainty into the outcome of the US-China trade talks by suggesting that any possible deal needed a different structure. So we started to see today equity markets sell off. There's actually been some good sell short opportunities so far today on certainly the S&P 500, the Dow Jones, the DAX have all had quite significant moves to the downside. We can have a look at those on the charts too very shortly. So bringing you back to silver, what I think is important that we all understand and we're all aware of is silver's performance over the last 15 years, and silver relative also to other currencies. So first of all, if we have a look at the performance here from 2003 to 2018, so over the last 15 years, the average net gain for silver over a year has been 12%, or just over 12%, 12.1%. And you can see some of the years here we've seen big gains, such as 2006, over 46% move, 2009, 47%, 2010, silver almost doubled in price. It corrected from 2013 to 2015, and so far, over the last 2 years, over 2016 and 2017, silver has been building a base, and we've seen a positive return on this market. What's important to understand is over the last 2 years or 2.5 years, the gold to silver ratio has peaked and hit 80-1. And that often marks a very important time to look to buy silver as well as gold as well, but it tends to be really silver that gets the most value when the gold to silver ratio hits 80-1. So essentially, what does that mean? Well, the gold to silver ratio would mean that if you owned, for example, both gold and silver, so let's say you owned 1 ounce of gold, when the ratio hits 80-1, for a scenario, let's say you went to a dealer, a gold and silver dealer, and you wish to sell your gold, you could sell 1 ounce of gold for 80 ounces of silver when the ratio gets to 80-1. So you would be able to get a lot more silver for your ounce of gold when the ratio is that high. Now let's say the ratio drops down to 65-1. At that point, it would mean that you would only get 65 ounces of silver for 1 ounce of gold. So the ratio is not as favorable, so you're probably better off sticking with your gold at that point. At this point right now, as of about a week and a half ago, the gold to silver ratio hit 80-1, and it favors investors to shift over, whether they're buying that on the futures market, buying that contracts, or they're buying the physical or getting exposure via ETFs. It just favors investors and traders to be buying silver. It's one of the most undervalued commodities at the moment when the ratio gets to 80-1 or higher. And years where the ratio has got to that level has been in 2016 over Brexit. We saw the ratio get to that level, and then we saw over a 17% gain in silver over 2016. Last year, the ratio at the beginning of the year hit 80-1, and then we saw a 7.1% net gain. And about a week ago, the ratio again hit 80-1. And right now, as of Monday's data here into the close, the ratio got to 80-1 within the last week, and silver is negative on the year, so it's minus 3.6% on the year. So we could look at this in terms of the average return for silver, which is normally 12%, and especially a positive year where the ratio is at 80-1 and traders and investors buy silver because it's very undervalued. So therefore, we could deduce that potentially from negative minus 3% at the moment, where gold is for net gain on the year right now, if you bought it at the beginning of the year, you'd be minus 3% down on it in terms of an investment. It could still go up another 12% in terms of the average net gain from here that would actually, if we add 3% on top of that, because that's the negative that silver is in at the moment for the year, we could look at a potential scenario of, from the current price at the moment, where silver's trading around $16 and about 35 cents an ounce, for it to go up within the sort of region of about 12 to 15% between now and the end of the year is in the realm of possibility, given the yearly averages, especially where we get to a ratio of 80 to 1. So that's the first point I want you to bear in mind right now. The relative performance of silver over the last 15 years, particularly when the gold to silver ratio gets to 80 to 1, which is a very favorable time to be buying silver, and the fact that silver has now turned negative on the year. So let's say you're a hedge fund or you're an investor and you missed out on the opportunity to buy silver at the beginning of the year, and you still anticipated, because of geopolitical risk, because of safe haven buying for gold and silver, the fact that silver is now negative on the year could represent a good opportunity to buy it, particularly as it's very undervalued at the moment. So there's no guarantees ever with trading. We're working with probability all the time, and this, from a probability point of view, does suggest that we could see this sort of return over this year, but again, no guarantees, of course. Now, if we go over to the gold to silver ratio, as I mentioned here, the gold to silver ratio, when it hits 80 to 1, that has worked very well over the last 20 years as a trading signal that comes along approximately every 12 to 18 months, where it's a good time to be buying silver. Over the last 3 years, it's come across every 12 to 18 months, but prior to that, the gold to silver ratio didn't hit 80 to 1 for about 6 years. More frequently, it's happened over the last 3 years, but again, it only really happens about every 12 months. It's just happened recently. So if we have a look at this, is where the gold to silver ratio over the month of April, we hit the 80 to 1 level. So you can see here where we got to that level. We've since reversed. This was going back to last week, where we sat around 79 to 1 after it reversed from the 80 to 1 level. And this is where we were seeing the price structure earlier today, where it broke back down. So it's now starting to roll over, where the ratio is starting to come back down towards the 77 zone and possibly lower. So it looks like the high is in with this ratio, which would suggest we could have the low in now at the moment for silver. Silver, if you have a look at this on the monthly chart, the gold to silver ratio, we are on the verge at the moment of breaking below the monthly lows from last month, where we spiked up to 80 to 1. And you can see previously this happened in 2016. Prior to that, we saw that happen around 2013 to 2014 before a reversal. And we've got the potential to come all the way back down to 75 to 1, possibly 65 to 1, and even down to about 62 to 1 as well is possible for the ratio to really break down significantly. The way you want to look at that is the inverse correlation. If the gold to silver ratio goes down, silver price will go up. And that's what we look to be heading to at the moment. Now, if all of that is a little bit complex, here's something to just make it really easy to visually see. So every time the gold to silver ratio, this is the price of gold, which is correlated to silver, but on years where the gold to silver ratio has peaked up over 80 to 1, these are years where it's marked a low for gold. We've seen significant gains after that point, and silver as well. So years where it peaks to 80 to 1, and we've seen these significant gains for gold and silver price. The reason I'm mentioning it a lot at the moment is because we just hit that level over the last month or so, over April and the beginning of May, and it could mark a very important level to be buying and looking at good opportunities to essentially accumulate the metals for trading positions at these levels where we're poised right now. Now, other big drivers when you're trading gold and silver, another big driver is two major news items. One is the FOMC announcements, another one is non-farm payrolls. So what you need to understand about FOMC announcements, these are by the Federal Reserve, and as head of the Federal Reserve, Jerome Powell has more influence over the US dollar's value than any other person. So his speeches are followed closely by traders. They present regular news trading opportunities. So we have the FOMC statement, which happens 8 times a year. 4 of those statements, so once a quarter, has a press conference afterwards. And on 4 of the statements is where the Federal Reserve are often anticipated to increase interest rates. The next FOMC statement where the Federal Reserve are anticipated to increase interest rates is on Wednesday, the 13th of June. So definitely have that in the diary if you don't have already, because that could be a major market mover, Wednesday, the 13th of June. And then we have the minutes of the FOMC, which happen 3 weeks after FOMC statements. And that's also at 7 o'clock London time. And the minutes of the FOMC statement are occurring tonight in 45 minutes. Now, the minutes of the FOMC statement, as I mentioned at the beginning of the webinar, they are not supposed to be as high impact as the actual statement itself, because essentially it's just a write-up of the minutes from the previous FOMC statement, but they are. Of late, they've become really important. The financial markets, a lot of traders are focused on the minutes of the FOMC. If you go back 2 years ago or 3 years ago, they were never as high impact as they are these days, but they are a big market mover now. So it's worth paying attention to that. If you see a lot of volatility in about 45 minutes time on the markets, it's because of the release of the minutes of the FOMC. Sometimes it can be a bit of a delayed reaction, and you might see some big moves a little bit later on in the session this evening after traders are just digesting the minutes from the FOMC, but it tends to be a big market mover. And another major news item, which of course we provide a post non-farm payroll trading webinar with Binary.com, and for all of the attendees such as yourselves, it's the non-farm payroll announcement, which happens the first Friday of every single month. And that is also a very important driver for the US dollar, gold and silver. One of the main reasons is because the Federal Reserve assesses that jobs data to determine whether the economy is strong enough to withstand higher interest rates. So if the data is very positive, it puts the Federal Reserve in a stronger position to increase interest rates. So the non-farm payroll is often a big mover for the US dollar, for gold, for silver, for commodity currencies. And that's the first Friday of every single month. From a technical point of view, so I've talked to you mostly through news, fundamentals, had a look at the ratios a bit as well, and we'll go over to the chart shortly. Then if you marry that up with the charts and you look at technical signals which indicate a bottom in the market, because at the moment I'm more interested in buying gold and silver as opposed to selling them, and I've gone through the ratios at the moment, you tend to be better off at this point just buying them at the lows here, where they're very oversold for the year. You've got negative returns on the year now. Both in gold and silver are flat, if not negative, on the year at the moment. So I don't really want to be selling into them. If I'm going to take a trade where I'm anticipating pressure to the downside with the metals, I would rather buy the dollar, or I buy the US dollar Swiss franc, or I buy the US dollar Japanese yen, or I look for some other correlation, but I don't really want to be selling gold and silver at these oversold levels. I'd rather trade it via another correlation, even selling short the euro, for example, or selling short a commodity currency. But when the gold to silver ratio is this extreme, I'm more interested in buying it. The lower it goes, I'll accumulate more. So at the moment, price structure that you want to look out for on gold, on silver, on platinum, on palladium is V-shaped reversal bottoms, because these occur in a downward trend. Once we break a downward trend, we very quickly start to see a reversal in price, and the confirmation of a buy signal then comes as a result of a breakout from the neckline of the V-shaped reversal. And that's what I'll go through with you on the chart. So we'll have a look at that very shortly, and I'll show you some of the price structures which are lining up on the metals at the moment. And I'll show you what I'm looking for in terms of the confirmation on those charts as well. So when we're executing a trade via Binary.com, we utilize a deal ticket which essentially gives us flexibility to take a trade where we don't need a stop loss and we don't need to take profit. This is great for news trading, and it's great for some of the faster trades that you'll take in the market, because you don't need a large stop loss, you don't need a large profit target. All you need to get correct is the direction of the trade, the exit, so the timing of the exit of the position, and whether you want the trade to go higher or lower. So, for example, the deal ticket here, we've got start time now because I like to get into the trade immediately. I'm looking at the charts to get my confirmation from a news item, and then I look to buy or sell based on what the news is telling me and what the charts are telling me as well. The duration, typically if it's a news trade, I'll be in and out relatively quickly, so approximately an hour or so, sometimes less, sometimes a little bit more, just depending on whether I'm getting in the trade in the morning, in the afternoon, or the evening. The payout is very flexible. You could look at £2,500. It could be £1,000, £500, £250, £25, £5. You've got a lot of flexibility on Binary. You can choose exactly what you want your payout to be. You know what your stake is up front and your payout. So it's very transparent. So your stake is what you're willing to risk on the trade. The trade loses, you lose the stake. Your payout is what you will make on the trade. If the trade wins, you win the payout. Okay, so it's all up front, your net profit is shown, your payout is shown, your stake on the trade is all shown there just very clearly. So if you are looking for the price to go higher, you're anticipating the price to close higher over the time frame that you've given the trade and you've executed that position. If you're looking for the price to go lower, so let's say, for example, you're looking for the US dollar, Canadian dollar, for example, to go lower today, or the US dollar, Japanese yen, if you are looking for those markets to go lower, you would go for start time now, duration, you would select that, the payout you would select, and you would put the stake that you wanted to risk on the trade and what you want your payout to be as well. So it just makes it really straightforward. If there's any additional questions on that, do let me know. So what I'm going to do, I'll move over to the charts and I'll talk you through that in a little bit more detail. Just before I do so, actually, I will go through something which I've had a few questions on from one of the previous sessions I did. This was about getting access to our custom-built market data and news trading platform. So if you watch the Commodities Corner on Fridays or some of our other webinars, we'll be going through real-time news. So today, we'll be getting the real-time news feeds as we go through the minutes of the FOMC, and we'll be able to see exactly what the FOMC members have said. We'll get it real-time, everything really fast. We've got sentiment, economic calendar, everything is set up there for you. Now, we're able to provide this to clients of Binary, and very simply, to get set up with a news trading platform here, I'll put the link in the chat there just to make it really easy as well. This includes 13 unique workspaces designed specifically by ourselves, the Gold and Silver Club. It covers the commodity markets, the Forex markets, cryptocurrencies. It covers forecasts. You get news and live video, so real-time news. It's powered by Thomson Reuters News and Data, and it includes pricing data for approximately 70,000 globally listed companies. You've got 40 million research items available and news coming through from 2,600 journalists across 200 bureaus. So there's been a lot of investment into this product, into this platform, and we've worked with Metastock and Reuters to produce a complete platform for traders of the Gold and Silver Club, and we're able to provide you access to that where you can download our workspaces, you can get a trial of the platform. So again, I'll just put the link there into the chat for you, which is on the screen at the moment, www.metastock.com/Gold Silver Club install, so you can get a trial and you can set up the same template so you can get access to our custom-built market data and news trading platform, which is very relevant if you're coming into minutes of an FOMC or non-farm payrolls or US crude oil inventories or FOMC statements. So you've got a lot of features which are available on that. Okay, so with that, let's move over to the charts and I will show you what I'm looking at as we get a bit closer to today's FOMC minutes. So just a quick check-in, everybody can still hear me okay, and you can still see the presentation. Okay, fantastic. Right, so thanks, Sharice, great. So let's get into it and have a look at silver first. So silver, we've continued to see this consolidation in price where essentially silver has been moving between just above $16, which in my opinion has been a great time to look to accumulate and buy silver at the lower end of the range. Typically when silver gets to around $16 or lower, the gold to silver ratio hits around 80-1 and has been a good time to buy into silver. We saw it break out over the last couple of days, and it broke out to around $16 and about 50 cents per ounce yesterday. We're ebbing and flowing a bit today. We have seen some profit taking overnight. We'll just see where we've come down to today, about daily low of $16.30 here on the day. Now, if we have a look at the price structure here, it's very common to see a pullback like this prior to minutes of an FOMC. What I'm looking at for here, we do have some positions on silver that we've entered around the $16 level here, just a little bit higher than that zone around support here, which you can see in the chart is around $16.17. What I would look at, if we were to see a dip lower in price for silver today, especially if it comes back down to around the 16 level, I'd be looking for evidence that the price is getting supported and any bids at that zone. If it just breaks through that support, keeps going lower, I would look to get in at a lower price, okay? But I wouldn't get in until I got some sort of confirmation of that. And that would involve probably a dollar breakout. If the dollar was to gain strength today off the back of the minutes of the FOMC, if they're very hawkish regarding additional interest rate decisions, if they're aggressive about the potential for let's say, interest rates increases this year, that would provide strength to the dollar and a bit of weakness here on currencies against the dollar and also the metals. On the flip side of that, if silver, continues to break out today, you want to look at that on lower time frames, such as the 1 hour, the 4 hour, and look at the potential for a breakout and a continuation back above, say, the 1645 level would be quite important today. I would look at that as a potential trade idea to take the price back towards resistance around 1660 towards the upper end of this range. At some point, I suspect we're going to get a breakout, significant breakout between now and, of course, the end of this year on silver because of the track record with silver on years with the gold to silver ratios at 80 to 1 or lower, and the fact that silver is now negative on the year in terms of net return. And I do see the potential for a breakout, certainly between now and the end of the year, but that's quite a large time frame. And for a binary trade, you want to be looking ideally to get in and out of trades quicker so that you can build your account quicker as well, rather than being in a trade for months and months. So what we're looking at here is real news trading today. And that's where, of course, the Reuters news feeds can help you a lot. But if we're looking at the price structure-wise at the moment, what I'd look at, the potential for a false breakdown in price and support to come in around the $16 level, or potential for a breakout on lower time frames. We just see the price shoot up and could easily come back to 1650, possibly even a breakout later on in the week, back above the weekly highs here of $16 and about 70 cents here on the chart. Now, coming back to what I mentioned before, V-shaped reversal patterns, this is what they look like in reality on the chart here, where you've got a trial. See if I can just bring up a chart which has maybe got less in terms of some of the indicators there, just to make it a little bit clearer for you to see exactly what is going on the charts here. So let's bring out a template here. We'll have a look at silver on the chart. I'll just show you that in a little bit more detail. So this is a V-shaped reversal pattern recovery that we saw in mid-December, which lent into the January effect, which we saw over the month of January. Very significant recovery here for silver after it broke above the neckline of this V-shaped reversal price structure. So this is exactly what it would look like in terms of a recovery here. We've had several of these previously as well, going back to the summer last year in July, where you had this V-shaped reversal basing formation on silver. Once we broke back above the neckline here, back above $16.15, we saw a significant rally higher here. And if you can spot these, they're very evident not only on silver, but also on palladium, where we get these time and time again. You've got a V-shaped reversal pattern, which we had back at the end of March, beginning of April. And we see these time and time again, these V-shaped reversals, where once you can spot these, you want to take a trade breakout above the neckline. So from a technical point of view, once you spot a V-shaped reversal recovery, we've had a lot of these on palladium, you look to take a break of the neckline. Sometimes you can get in aggressively at the beginning of a V-shaped reversal. These are also evident on platinum as well. We see these quite frequently. You can see these reversals, which have happened several times during this whole movement to the upside. In fact, you can see a few here going back to mid-December as well. So from a technical point of view, those V-shaped reversal breakouts can be quite lucrative to trade those breakouts. If we have a look at gold here going into the FOMC minutes today, gold has given us a buy signal this week. It capitulated on Monday after a breakdown of support, then reversed into the close, broke above 1296 today, so $1,296. It's pulling back as we get closer to the minutes of the FOMC, which is not a surprise, but it's back in filling quite a lot. It's about flat on the day, down 0.25% on the day at the moment. But if we do the big driver today for the next move here for the metals will be the dollar. And the dollar today is broken back out to 5-month highs. So you can see it's right at the upper end of the range, although it's a bit overdone on the day at the moment. So it looks like it's getting a bid prior to the minutes of the FOMC. So you can see by the dollar breaking out like this, without even looking at any other currency charts, you can deduce from that that very likely we're pulling back on the Australian dollar, the New Zealand dollar, the Euro US dollar, and the pound US dollar. They will all suffer to the downside, or you'll be able to sell short lucrative opportunities as well to the downside. But overall, as currencies, they will go down as a result of dollar strength, which I'm sure you're aware of. So if we have a look, for example, at the New Zealand dollar, US dollar, it's selling off because of US dollar strength at the moment. If we have a look at the pound US dollar, it's broken down to the lowest level since January today as a result, again, of US dollar strength today. The euro has broken down again. We've come all the way back down to the weekly pivot below. Quite a strong move lower, actually, for the euro here as it's come back towards the December swing lows. It's even broken below those levels as well. The euro is the most inversely correlated FX market to the US dollar. So if the US dollar is surging, breaking out to 5-month highs, you will see the euro have a very similar inverse reaction and breakdown as well. So the euro is looking very weak today too. And also the Australian dollar. The Australian dollar has actually been leading the move here higher over the last week or so. The recovery has been stronger, but it still cannot sustain a rally in the face of a really strong dollar. So the big one to watch today, so if you're trading the minutes of the FOMC live in about 30 minutes, you definitely want to be watching the dollar index. The dollar index has reached the upper Bollinger Band. It's about to hit the upper weekly pivot as well. It might be by the rumor as traders are anticipating a hawkish minutes of the FOMC. And then let's say it's just what is expected, the dollar could sell off. If it's not what is expected and the FOMC minutes are more dovish, and they're not as aggressive regarding future interest rate decisions as was expected, the dollar could then sell off, and very quickly we could see breakouts and reversals on the euro, on the pound, on the New Zealand dollar, on the Australian dollar. They're also extremely oversold right now. So if we bring out, let's see if we can bring out, the RSI. RSI can be useful just to measure oversold conditions. So let's have a look at the pound. The pound is really significantly oversold at the moment, so it'd be a surprise to see it break down much lower today. I think it's probably pretty much done for the day. The euro as well is really oversold. It's about to hit support at the weekly pivot, the previous swing lows as well, although you would have been caught out just trying to catch some of these bottoms. Overall, the trend is downward trending, but you may be able to catch some retracements here as well. At some point, we are going to reach a bottom on these markets on the euro once the dollar starts to turn, but at the moment, my eye is definitely going to be on the metals going into the minutes of the FOMC, gold, silver. I'll be watching platinum very closely as well for trade opportunities here. You can see we've got a strong buy signal earlier on in the week. It's pulled back a little bit, but the metals have not pulled back anywhere near as much as we have seen a pullback on the currencies, which have had quite significant sell-offs against the US dollar here. So we've seen quite extreme moves to the downside. What I'm also looking out for, I'm actually already short the S&P 500 at the moment. I've got a sell signal still on the S&P. Watch out for the movement on the S&P 500 as well on the minutes of the FOMC. I've got a sell signal developing on the DAX today, which I want to see if that holds into the close. I've also got a sell signal developing on the FTSE 100 at the moment. The NASDAQ as well has developed a sell signal too, so I'll be watching that today. And the Dow Jones too still looks quite vulnerable. But before executing any additional positions, I do want to get the minutes of the FOMC out of the way. Crude oil, we've now actually we've now exited one of our long positions today, and we're looking for re-entries for a fresh opportunity to capitalize on the next move here. I've actually short term, I don't know whether this will continue to follow through going into or after the minutes of the FOMC, but I've got the beginnings of a sell short signal setting up for oil here. Bear in mind though, yesterday oil broke out to 4-year highs and Brent crude oil cleared above $80 per barrel. We've done very well on our long positions here on oil on the recent breakouts. In fact, already Brent crude oil is recovering, very shallow retracement. I'm looking at the potential after the minutes of the FOMC to get back into oil. I might well be looking at Brent crude oil as a long here if we do hold with a positive close today. We seem to just get really shallow retracements at the moment. We broke above a very critical level of resistance yesterday, above $80 per barrel. But again, I'll wait for the minutes of the FOMC just to get that out of the way too. Copper has had a very cyclical sell-off. We see this very often going into the minutes of an FOMC. Both FOMC statements and minutes of FOMC, we often see copper sell off in the lead up to that and then reverse and break out after the actual minutes have been released. So there's quite a lot for us to have a look at. I noted earlier on in the session, the US dollar Swiss franc sold off. We've got a retracement on that now. I would look at that. This will be dependent as well on the dollar. If the dollar breaks down today and reverses, you could see a potential retrace entry on the US dollar Swiss franc and also the US dollar Japanese yen as well. We've got a sell signal now on the US dollar Japanese yen. The reason I mention them is that they've got correlation with the US dollar. If the US dollar does reverse and starts to sell off, we may see a sell short opportunity on the US dollar Japanese yen or the US dollar Swiss franc as well. So I would look out for potential trade opportunities on those two. So I'll be watching, or just trade the dollar directly. The dollar is looking pretty strong at the moment, although I don't really want to get in the way of that breakout to 5-month highs at the moment. I'd rather be looking at opportunities on the metals. So there's definitely lots for us to be looking at lots of trade opportunities coming up within about the next 25 minutes or so. So we'll be watching out for the impact that that does have on the markets. Again, if you want to get set up so that you don't need to be looking at Bloomberg Live TV, which is now a paid-for subscription actually to get access to that, you don't want to be watching lots of different websites. You want everything in one place and access to custom-built data and new trading platform. Very simply, you can get access to that via www.metastock.com/Gold and Silver Club install. You can get a complimentary trial of that to try it out. You need to go to that link in order to execute that. There's also a link at the top of the page there to get access to support, to get you assistance with getting those installed. And again, they cover our workspaces designed by the Gold and Silver Club. You've got commodities, forex, crypto, forecast, news, and live video powered by Thomson Reuters News and Data, where you have approximately 70,000 global listed companies, their pricing data, 40 million research items available, and news from 2,600 journalists across 200 bureaus. Now, alongside that, if you would like to also join us at the Gold and Silver Club for our live trading rooms and get access to those during the week, and also access to our real-time trade alerts delivered instantly via email and SMS of every trade that we're taking, as well as our weekly trading plan with technical analysis and our fundamental research, access to our private members academy website with access to a range of our training videos, strategies, signals, and discussion boards, and also VIP phone and email support from our senior traders, and your platform setup and configuration with customized charts and indicators. You can get all of that again by making an application to join us at the Gold and Silver Club, which is www.jointhegoldandsilverclub.com. Okay, fantastic. So I hope that helps, guys. I hope that gives you a bit of clarity and some help for trading the silver market. Again, we've got a big news item coming out within about 25 minutes now, so I wish you all good trading, and you can find out more with the links I posted there into the chat as well if you'd like to get set up on either the live trading room program or for our news feeds as well. Thanks again to Sharice and the team at Binary for hosting today's session, and of course we very much look forward to seeing you all on the next one. Okay, thanks again, guys, appreciate it, and we'll speak to you very soon. All the best, take care, and we'll speak to you soon. Thanks, guys, bye-bye.